Investing in Palantir can be one of your smartest moves over the next decade or one of your biggest regrets. We've seen time and time again in the stock market where stocks with a lot of momentum end up working out extremely well or not so much. I've analyzed hundreds of investments, including investments for high net worth clients, and the principles that we're going to use today can be applied to both publicly traded stocks and our usual alternative investments. If you need any of the AI prompts that I'm going to use during our investment analysis today, go ahead and check out the link in the description below, and let's get right into it. So what we're going to do to start off is we have our stock evaluation checklist on the left, and I have Notebook LM on the right, our AI tool. The reason that we're going to use Notebook LM is that this closes the universe of information that we're going to use to analyze so that we know that the information we use is actually accurate. If you were to use ChatGPT or other AI sources, it's going to pull from all different kind of sources. It can pull from Google, it could pull from Seeking Alpha, and we don't want that. We want to make sure that our information is coming directly from the company and that it's accurate, right? So starting with step number one, I have linked here. Again, this is all going to be linked in the description. We have our materials that we need. And so for this analysis, we're going to use the latest shareholder letter, the 10K and the 10Q. The reason I have both the 10K and the 10Q is I like to use annual financials from the 10K. But I do want the 10Q because the 10Q has the latest information in it. We're going to upload these documents into Notebook LM here, and we're going to go to our chat. And so if we go to our checklist here, this is going to walk us through a thorough process so that we can understand this company and get a full analysis and know if this stock is something that we think is worth buying or if it's something that we think we should pass on. So let's just copy this right into Notebook LM. What does Palantir do? Palantir's core business involves providing 4 principal software platforms. That's Gotham, Foundry, Apollo, and API. And there's descriptions here that I won't read for time purposes. I'm very familiar with this company. But essentially what Palantir does is they provide AI and data-driven software for large-scale institutions like the government, large companies, so that they can make better decisions for their business. Their product is extremely sticky. Think about something like a CRM for your business like Monday.com. Once it's in your company, it's extremely hard and time-consuming to switch from their products. And so this means that they have a lot of recurring revenue. Once you become a client, you're usually a client for a long period of time. What drives revenue growth? So Palantir's revenue growth is driven by several strategic initiatives. So they plan on expanding within existing customers. So they want to expand the services that they can offer with their existing customers. They also have a customer acquisition strategy where they're targeting large-scale complex opportunities. That's real key here, both in government and commercial. So they're trying to solve complex problems for businesses. And also they want to accelerate the sales and marketing approaches for the API boot camps and all these other services right here. And who are their primary competition? Now, as I was researching this, it's very interesting because there's actually not a current company that does exactly what Palantir does. And that's what's made them so successful thus far, is they're one of the few companies that can do what they do. Their competition is going to be large enterprise software companies, government contracts, and system integrations. But I feel like it's very key. This statement right here is key to this company and us understanding it is organizations frequently attempt to build their own data platforms using a patchwork or custom solutions outside consultants, IT service companies, packaged enterprise, and open source software and internal IT resources. And so what this is really saying is that as a company, if you're a Palantir customer, you can pay Palantir to use their services, or you can try to build it your own and use an IT consultant. But think about it from a business's perspective. If you're going to build it your own, not only is it going to be labor intensive, time intensive, and take a lot of money, but you probably don't have the same expertise that Palantir has, because Palantir has been doing this for a very long time and they're very good at it. So it probably makes more sense to just pay Palantir to do it. These are all good things for investors. That means that their business is useful, is very sticky. Their business has a lot of growth opportunity in front of it. But this last question here about the long-term goal or vision is key as well, because if we're going to invest in this company for the long term, we have to believe in their long-term growth and vision, what they do. It says Palantir's long-term strategic goals and vision are deeply rooted and founded in its principles and mission. The core mission is to build software that empowers organizations to effectively integrate their data, decisions, and operations at scale. So right here, if you're an investor and you don't believe in this statement, you don't believe in data, you don't believe in large-scale operations that involve data, well, this isn't an investment for you. Kind of makes sense, right? If you do believe in this, then this is something that you want to dig into further. So we understand the business, we understand what they do, we understand how they make money, we understand what's driving their revenue growth. But in researching this company, what really drives their business is Gotham and Foundry, right? What really drives their business is these huge government contracts and large businesses that use both Gotham and Foundry and the data to improve and integrate services within the business. And once it's in there, it's almost impossible to replace, which we're going to get into the financials next, but that's largely driven a lot of their financial success thus far. So now that we understand the business, let's look at the financials. So what I have here is the Buffett financial metrics table. Again, all this is going to be linked in the description, so you don't have to worry about pausing the video, writing this down. But if you have never read the book Warren Buffett and Their Interpretation of Financial Statements, I highly encourage checking it out. It's like the Bible if you want to learn how to read financial statements. But what I did was grab all the most important metrics that Warren Buffett actually looks at, and we're going to throw this into Notebook LM, and we're going to see how Palantir lines up for all these metrics. So gross profit margin, we see 80% gross profit margin consistently over the last 3 years. That's phenomenal. 3 months ended 2025, again, 80%. That's amazing. Interest payout, not available. And it's not available because they don't have any debt. They don't pay any interest. So net earnings, we see that it's improved since 2022, where they did not have a net earnings, and now they're at 16%. That's good. Debt to equity, very low. That's really good. Not a lot of debt. Equity ratio, amazing, 0.79. And if you don't know what any of these mean, in the table, it's going to have a brief description of what every single one of these metrics mean. A return on equity, 9%. That's pretty good. Pretty good. Capital expenditures have gone down dramatically. We see that right here, and this is in thousands. We went from 40 million to 12 million, and yet revenue is increasing. So that's really good. CapEx intensity versus revenue, it's super low. So what this is essentially saying is that for them to continue to generate revenue, they don't have to keep spending a lot of money compared to heavy CapEx businesses that have to keep, pouring into equipment, all these things to generate revenue. Earnings yield is not going to be available because we don't have the current share price in Notebook LM. Return on capital could be better, right? 5.94%, but you still are getting a return on capital. And then right here, current ratio, very clean balance sheet, amazing, 5.96. So overall, Palantir has very, very healthy financials. They have a very healthy financial position. But including in this, we also want to review our stock-based compensation and our share count trend. Stock-based compensation is going to be paying executives in forms of stock. We want to know what that is, and then we want to know if they're increasing their share count. The best way I can explain the share count in dilution is, imagine if there's a pizza and you cut it in 4 slices and you own one of the 4 slices. So you own 1/4 of the pizza. Imagine if that pizza were to then be cut into 8 slices, but you still only own 1 slice. So before you owned 1/4 of the pizza, now you own 1/8 of the pizza. That's what happens when the share count gets increased. So we can enter what are the trends for stock-based compensation and share count trends. And let's see what's in our 10K and our 10Q. And if you actually haven't gone through a 10K or a 10Q, I encourage you just to go through it for exercise. I remember back in the day, I would go through these like line by line. It's actually how I got really good at analyzing stocks and investments, as I would go read the 10K. But there is so much information in there that will help you understand the company. They will help you understand the risk. They'll help you understand the financials. Everything is broken down. And especially now with AI, they've made this extremely easy. So stock-based compensation, 2022 to 2024, we see that it has continued to be pretty high, right? Like total stock-based compensation expense was 691 million. And I believe, let's see here, I have Palantir's financial metrics. So their net income, and this is in billions, for 2024 was 460 million in 2024, but yet they paid out 691 million in stock-based compensation. That's extremely, extremely high. So this is kind of a problem, right? Like they're paying a lot of executives in stock-based compensation, which ultimately is hitting the bottom line for investors. But also remember, when you have a really fast growing company like Palantir, is the same thing with Google, same thing when Apple was first starting out, you really have to pay executives in stock-based compensation, because not only does it allow you to recruit really good high rank and file like engineers, executives, but it also improves retention. So there's always a little give and take with this, but this is something as an investor we want to watch. Because if we're making 460 million in net income, but yet we're paying, like they paid more out in stock-based compensation than they made on the bottom line, right? So this is something to keep an eye out on. Shares outstanding have also increased. So shareholders are being diluted from here to here. So some dilution, high stock-based compensation. Let's keep that in mind. But the financial metrics were really clean. So some bad, some good, but we're still on track here. Technical indicators. Now, I'm not a technical investor, but what I do like the technicals for is to get a general idea of where the stock is compared to where it was, where the stock is it an uptrend, downtrend, and then the 50-day and 200-day just kind of give us a gauge on price comparisons, right? It's all about relativity. So let's look it up. And if you're wondering what this software is, this is TradingView. So the purple line is going to be our 50-day moving average. The red line is going to be our 200. We're on a weekly chart right here, but we see clear bull trend, well above the 50, well above the 200. So this was the buying opportunity a couple of months ago. For those that got in, congratulations. But we see technical wise, it's a clear bull trend well above its moving day, long-term moving day averages on both the weekly and the daily chart. Macro sentiment and the market sentiment. So what this is saying here is that we want to know just overall in the market, where are we at? Like the stock may be bullish and doing great, but the market as a whole, what is the market as a whole doing? So let's look at the triple Qs, the NASDAQ 100, clear bull trend. Same thing is going to be for the S&P 500. Market's at all-time highs, so we're bullish. Two ways to think about this. Either you're buying at the very top of the market. I don't predict market movements up and down, But either you're buying at the top or you're following the trend. I'm also not anti-trend. I don't try to pick the top of the market and go short and think that it's going to crash or anything like that. But it's nice to know that if you're going to buy, you're going with the trend. You're going with the general market sentiment of being bullish. If everybody is bullish, why would we think out of the thousands of participants in the market that we are the smartest guy in the market and try to go anti-market, right? Like that just doesn't make sense. Back when I was a trader, you would never do something like that. Like that's the easiest way to lose money. As far as macro risk, we're not going to spend too much time here for the purposes of this video. But I think, the biggest risk when we're talking about Palantir from a macro perspective is we have to think about government spending. Governments continue to run really high deficits. If that ever changes and Palantir's top customer is the government, that presents a big problem for them. So we will want to see them continue to expand their offerings. I believe they will get there and continue to expand how they offer. But for now, if the government were to cut spending, that definitely could affect the business. So now let's move to our valuation checks. We want to know, what is this priced at and how does it compare to its peers? Now, earlier, we pointed out that its peers are going to be software enterprise style companies, but Palantir really doesn't have a direct competitor. They're kind of like first to market for what they do. But I did put together a compilation of companies that are enterprise software focused and both data focused, even though they don't do directly what Palantir does. I mean, 29% growth, that is really, really good. 17% the year before that. So it's on par with the averages. EBITDA margins, okay, not the greatest. We see a company like Microsoft with 50% EBITDA margins. The average is around the 20% high teens range, and they're just not quite there yet. And price to earnings, 669. Wow. I wouldn't even pay attention to this because this is definitely driving up the mean. I'd be more focused on the median right here. And you could already say that the market is already expensive, right? Like historically, PEs are around 15. Times have changed. We really haven't seen 15 PEs in a really long time. So even if you want to say that the new normal is like 20 to 25, even with that, I mean, a 600 PE, I mean, that's just astronomical valuation. That's the problem with high momentum stocks, is the valuation. But we see how it compares here to even pretty expensive companies. Microsoft's trading at a 39 multiple, and even still. Now, with that being said, there are certain companies, NVIDIA is one of them that we can think of, that will always probably trade at a really high multiple. Amazon always trades at a high multiple. But even so, that momentum has still carried on, right? And regardless of what you want to say, a dollar is a dollar. I did not invest in NVIDIA, but a dollar is a dollar, right? Like if you invested in it, you've been very successful. So where does that lead us to with our upside and downside levers? Well, for one, on the upside, Palantir has a very sticky product. Once it's integrated with a company, I mean, it's there to stay, right? They're also in a growing market. AI, data, I believe, is the future. I believe most of us probably watching this video feel the same way, that is the way that the world is growing. So that's a great tailwind too. And then on top of that, they have some outstanding financials. I mean, outstanding margins, low debt, a lot of growth on the top line revenue, What I don't like is the bottom line of the company. The net income isn't really too strong, and that stock-based compensation is extremely high, considering that on the bottom line, you have 460 million and you're paying out executives more than you had on the bottom line, right? But these still are pretty strong. Downside levers for this company. Number one, it's got to be high valuation. No matter what valuation you look at, I know we looked at price to earnings and we didn't do enterprise value to EBITDA and price to sales and price to book, but no matter what way you slice it up, this is priced extremely expensive. Growing share count and dilution. We've already touched on this. That's a problem because if you're already at a high valuation and you're getting further and further diluted, your case to make money just gets worse and worse. Where does this lead us? Palantir is trading at 150. If you were to invest today, can you get to 1,000? You know, what is the recommendation here? Well, here's how I feel. I like Palantir. There's a lot to like about this stock. There is a lot to like about the financials. I think, you know, buying at this level with these valuations, based on everything that we've seen today, you would need continued astronomical growth to gain value. But on top of the growth, you also need the market to continue to remain very, very bullish on it. I'm not saying that the market would change. I'm saying that there are factors in the economy and factors outside of Palantir that can shift the market sentiment as a whole, right? Like it could flip just like that. We've seen that with the whole tariff situation. With that being said, as we've seen with NVIDIA, that's been in that same situation for years now. I mean, just look at this. I'm down here and this was in 2021. Let's zoom in here. This is November 2022. So less than 3 years ago, we're at 14 bucks. It's 173 now. That's more than a 10 bagger. That's a Peter Lynch for you, a 10 bagger, right? But, you know, past doesn't predict the future. So where does that leave us? I believe that this is a very solid stock. I do believe that if I were to invest in this, I would need the price and the valuation to go down. I would definitely need there to be a strong pullback in the stock, and I would have to wait for buying opportunities. We see right here, one of those pullbacks was just a couple of months ago. I did not buy this stock a couple of months ago because it was still valued just really high. And, you know, it has since more than doubled and bounced back. But I think it's a situation that the valuation just has to come down and line up, because what you have to understand about valuation is that the higher that you buy this stock, the higher the valuation is, the more it has to do just for you to make a little. There's many examples, the Amazons, the NVIDIAs, that defy that logic, but I never bet on defying logic. I bet on protecting my downside. And you really have to think about it from this perspective. Palantir could do amazing. They could continue growing their revenue. They could have amazing margins. And even if valuation was just cut in half to 300, which would still be astronomical, you still would lose money. You wouldn't make money, right? So with that being said, I think the final analysis is Palantir going to 1,000. Of course, I don't know. I don't predict the future, but I think investors just need a better entry point and a better valuation. Something like 44 right here seems very far away. Not so much. When you really think about it, you can get to 44 real fast if there's some type of economic turmoil, if there's a cut in government spending, if there's a change in sentiment, anything of that nature. So now that you've seen my investment analysis process for Palantir, if you're wondering how I built my investment analysis skills and also transitioned my career from being a military drone pilot to a full-time private market investment analyst, make sure you check out my video of how I transitioned my career and the 7 tips that I've used. Also, do not forget to subscribe to AltShift. AltShift is a weekly newsletter that focuses on all things alternative investments, where I give portfolio insights and tips on how to manage your portfolio and become a better private market investment analyst.